I'll tell you that banks figured out long ago that they would rather be a lien holder on a property rather than be the landowner owning that property, because the owner of the property has to maintain and have the liability for that property. And the lender, they're sitting there on title as a secured lien holder, receiving monthly payments, receiving that rate of return, and they're not doing any work on the property.
Thanks for joining us for another great podcast. Today, we are talking about money, investing in different ways maybe you didn't think of, or ways that you thought of before, but you really didn't know all the great advantages of why you should invest one way over another way. So, we have Fred joining us today, and he is a fund manager, but he does specialize in alternative investments, and he is an expert at that. So, we are going to talk about real estate. We're going to talk about note buying. Huh? What's note buying? Well, stick around and you're going to find out. Fred, thanks for joining us today. Tell us a little bit about you and how you started getting into investing in this alternate universe of investing.
When I started my career, it was right in the beginning of the dot-com boom, and so, I spent many years. I worked at different startup companies, tech companies, and let me tell you, it was a wild roller coaster ride. Super exciting.
Mhm.
But what happened, Melanie, was that we went through the dot-com boom, but then what came after that? If you remember, the bursting dot-com bubble, right? We had the bursting of the dot-com bubble. We
Yes.
had the September 11th terrorist attacks. And so there was a time with all this turmoil in the world, and the tech industry just went off the cliff. The job
Yeah.
market was horrible, companies going under left and right. And what that made me realize was that I was taking on this huge risk because I was relying on the paycheck from my job as my only source of income. And even though I loved the work I was doing, I learned
Mhm.
that it didn't matter how good of an engineer I was or how talented of an engineer I was. It
Yeah.
didn't matter because if things were not going well at the company, I could lose my job through no fault of my own. And so I learned the risk of relying on your paycheck as
Mhm.
your only source of income. And
Yeah.
that was the big wake up call for me. And so decided to make a change. And I said, okay, I want to have alternate sources of income and diversify.
Mm.
We all hear about diversifying when it comes to investments, but how about
Yeah.
diversifying your income streams, your income sources? That's what led me into the path of investing.
So let's dive into that, a little bit. I love your background, and I think it is so smart that we have multiple sources of revenue. And I've worked for myself pretty much my entire career, and I always felt sorry for the person that got let go. I've had neighbors that are in their 50s and suddenly they've lost their job and they don't have income anymore because they didn't have other sources. So, what are some of your favorite ways for someone? Let's say, maybe even at any age, like I'm 61, I don't think it's too late for me to start alternate sources of investing and putting money in different places
Yeah.
versus even someone who's maybe 30.
Yeah. No, absolutely. I totally agree. It's never too late. The best time to start is right now, right? To everyone
Mhm.
starts from where they are. But this is
Yeah.
so true. You never know when you may have a surprise in life, right? And you can
Mhm.
always ask the question, well, how risky is your paycheck? And people will say, what do you mean? How risky is my paycheck? Well, it's we are all subject to different circumstances. We have inflation
Yeah.
or layoffs, economic downturn. And so what I wanted to do was diversify my income sources. And I turned to alternative investments. And what an alternative investment is, it means basically that
Mhm.
you're investing in things that are outside of the typical Wall Street type products, your stocks, bonds,
Yeah.
mutual funds, all of that. you're going outside of that. And so we start
Mhm.
looking at different assets like investing in real estate, which
Got it.
is very popular.
Yep.
You can invest in mortgage notes, you can invest in private businesses. There's so many different areas, but the common thread with these type of alternative investments is that you're buying and building assets. And when you have
Mhm.
these assets, they generate cash flow for you. And now you're earning income while you wait. And oftentimes you're turning on a faucet of an income stream that starts almost immediately. And other traditional asset classes, they can be good, but a lot of times you have to wait until you sell in order to get any money out of it. And then you don't have the investment
Mhm.
any longer. Right. And so that's what I
Yeah.
love about owning assets because you control them, you
Mhm.
leverage your skills and abilities or those of someone else to keep the income generating. And this is how you get paid while you wait.
So let's walk through some of the assets and do the pros and cons and the risks that are related. And I love owning assets. I own some real estate. I've even owned Instagram, different Instagrams, but then I thought I had an asset. And then all of a sudden Instagram said, nope, we're turning yours off.
It's out of your
So all of a sudden
control.
you lost your,
Yeah.
you're like, so, there's risk with everything of what do you have control of? Obviously, real estate you have more control of, but there still is risk where,
There is.
the market can turn, different things can happen. Rental properties, they don't pay rent, they trash your place. So let's walk through, but there's great tax advantages to real estate. So let's start with that
Yeah.
one.
Yeah, absolutely. So real estate is one of the ways that most wealth has been generated in this country through owning real
Hmm.
estate. And I like the idea of owning it long term. So real estate, it's not get rich quick, it's get rich slow.
Hmm.
And yeah, you can earn income while you own it. That's the cash flow. You can receive fabulous tax benefits as well, tax incentives,
Yeah.
and you also get appreciation from the property
Yeah.
increasing value if you've done a good job of buying it right and you manage it well and you take
Hmm.
care and maintain the property. That's going to help with the value. And then the last one is the amortization. Basically, if you use financing to buy the property, you have tenants paying rent and they're paying down your mortgage, your loan. And so
Hmm.
those are the 4 ways that you benefit from owning real estate, and it can be very powerful over the long term. I feel
Yeah.
like it's something that everyone should look at and consider and see if it's right
Hmm.
for you.
Yeah, and we're not talking about your home that you're living in, we're talking about other pieces of property.
Correct.
Walk us through, I think, where people don't realize the tax advantage. Say, like, let's say you had, I don't know, 10,000, 100,000, whatever number you want to use, that you put in the stock market that was maybe earning dividend money and, coming up, getting some cash there, or even a CD versus having real estate, what that
Yeah.
looks like on your taxes.
Yeah, I'll hit this at a real high level.
I
The
love that.
government, our government, the US government incentivizes 2 specific activities for all of us. It's open to every American, every taxpayer. 2 activities are incentivized through the tax code. The first one is
Mhm,
owning a business, being small business owner. You get a lot of deductions and tax benefits for doing that. And the government wants to
mhm,
stimulate small business. The largest employer and jobs provider in the country are small businesses. And the
mhm,
other incentive is for owning rental real estate. People need a place to live. The government wants to encourage rental real estate. Businesses need a
mhm.
place to operate. And so through commercial real estate, renting out office space or commercial space for businesses. And so the government incentivizes these 2 activities right in the tax code. This is not some kind of obscure tax loophole. It's available to anyone. And so this is why we have tremendous tax benefits available. And it's up to you each individual person, it's up to you to learn about it and figure out how you can apply it in your life. And when you do that, it will reduce your tax burden. And other people may complain about it. They may point fingers at you saying, hey, you're taking
Yeah.
advantage or doing something backhanded. But no, it's right in the tax code. Anyone can do it.
Hmm.
And it's something that it's on you to learn about it and implement it and do the work and take action. And then you benefit by maybe your tax bracket gets dropped down into the lower bracket or maybe two, even if
Hmm.
you're doing a good job.
Yeah, I mean, all being equal, if you only have stocks or you invested in CDs or something that you're getting income from, you're going to pay tax, a high dollar tax on percentage tax on that
Mm.
income earned off of that versus the real estate. You're going to have deductions. You're deducting all the expenses from it. You've got the depreciation. So you probably have zero money that you made money on that, but you paid zero money in taxes on it. That's kind of the difference to me. The other money you're gonna be taxed on, the other one you have enough where you can have enough write-offs and depreciation where you may not have to do
Yeah.
it. So you also talk about mortgage notes. So this is kind of new to me. I've kind of heard this.
Mhm.
So
Yeah.
walk me through your definition of, buying notes.
Yeah. Absolutely. Mortgage note investing is my main business activity. And I've been in the business since 2010, so 14 years, 15 years now. And what note investing is, you're buying loans. You're buying residential mortgage loans. They're secured by real
Mhm.
estate. So you have something that's tangible backing your investment. And that offers a lot of downside protection. And I'll tell you that banks figured out long ago that they would rather be a lien holder on a property rather than be the landowner owning that property, because
Yeah.
the owner of the property has to maintain and have the liability for that property. And the lender, they're sitting there on title as a secured lien holder, receiving monthly
Mhm.
payments, receiving that rate of return, and they're not doing any work on the property, right? When it's almost
Yeah.
like, think about this, it's almost like the difference between a tenant mindset and property owner mindset. If the water heater breaks or the air conditioning goes out, what's the tenant mindset? Oh, they're going to call the landlord and say, hey, there's a leak in the roof or there's a problem with the air conditioning. But the property owner, they go and get that fixed. They don't call the bank up and say, "Hey, we need a new roof on the property." The bank has nothing to
Right.
do with that. And so there's a different mindset there that you're dealing with. But for us as investors, there's a secondary market where mortgage notes are bought and sold every single day, and we can tap into that and buy mortgage notes. It's available to us as investors. And the beauty of it
Yeah.
is that we transition from being the one making the monthly payments to being the one receiving the monthly payments. And when you do, that's a huge shift. And that's how you're generating cash flow and income from an investment that has downside protection because you have a tangible asset backing your investment.
Yeah. So I got a couple questions. I'm not going to go in the weeds. I promise. Get down too far. But so are these first liens or are they second liens that you're buying?
They can be, both are available out there. You know, the lien position, it gets into understanding how the rules of title law in the United States, but it refers to the priority and order in which
Right.
the
Like
loans
first
are
lien, you're
paid
first
off.
in line to get the money. Right?
Yeah.
And I've just been, I know sometimes second lien holders is much more risky because you may not get
Well,
paid.
there's a lot of different nuances there. I've done really well with both
Both.
types. You just have to know the ins
Okay.
and outs there and understand how to manage risk. Managing risk is an important part of note investing, and it's something I talk a lot about
Yeah.
in my book that I wrote about note investing, is how to manage risk the different skill sets and steps you take. But this is something that it's a part of the business. So if you're really hands-on in note investing, it's an important skill to develop.
Yeah, and his book is The Little Green Book of Note Investing. It's on Amazon. And so my question is, all right, I want to do
Mhm.
this. I want to do note investing. Where do I go? Who do I talk to? Do I need a third party that's involved? Do they charge me a fee? How do I do
Yeah,
it?
that's a great question. So there's two ways to get started in note investing. The first way is what I call active investing. You're active in the business.
Hmm.
You're going to get your hands in, roll up your sleeves, buying notes, analyzing them, building up a portfolio, and then managing the portfolio. It's a great business, but it takes a lot of time. It's hands-on. Now, for someone that maybe doesn't have so much time available, they like notes, they like the idea of the asset class and its benefits, but they just
Hmm.
don't have the time. So you can also be a passive investor. And what that is, you invest in a note fund where the fund managers are raising capital for investors, and then they pool all those funds together and go out to the secondary market and buy notes in bulk quantity. And they're able to
Mm,
leverage that capital, get better discounts on the purchase. And the benefit to investors is that they're able to leverage the expertise, the experience, and the relationships that the fund managers have. And they're
yeah.
able to earn their rate of return. And really, it's hands off. It's a passive investment. They don't have to do work on it. And maybe you're a passive investor, you're focused on your career, or you're a business owner, you're focused on growing your business, doing what you're good at. And so passive investing can be a great option for you if that's you. So those are the two ways to get started. Active investing, it takes a lot of time, and it can be really, really great. Or passive investing for other folks where they don't have a lot of time and they want to leverage the skills and expertise of the
Yeah.
fund managers.
Do you have to, I mean, are these fund managers accredited? Do you have to worry about like getting scammed? I mean, there's always that even happens in, you see it all the
Yeah.
time. I mean, we've had people lose a lot of money that thought they had, credible people. Is there a way that you get involved with the right people and they don't take all the money from the
Yeah,
fund and run
that's
away?
certainly a major concern. You have to perform your due diligence on who you're getting involved with. And
Mm,
frankly, this is for any business transaction. You're going to go into a partnership with someone. Do you really know who you're getting involved with? What's their track record?
mhm,
Are they trustworthy? Are they good business people that have a good reputation? And so it's important to really look at that, perform due diligence. This is a big part of my book too, is about how to
yeah,
perform that, because you want to be very careful who you're getting
mhm,
involved with, whether you're handing over
yeah,
funds as a passive investor or entering into a business partnership with someone. You want to
mhm,
be really careful who you're associating with. It's so important, and a
yeah.
lot of people have gotten burned in the past, for sure, it happened.
So I have a neighbor who he had a lot of like Section 8 type houses, low income, really quite a few of
Rentals.
them and a lot of other real estate. And he was saying what he's done now is he's gotten out of that and he's really become the
Yep.
bank. So he is now with the properties. He's like, hey, you've been renting from me. I'll tell you what, I'll give you a loan. I'll be the bank and I'll secure it with the house. And now he's become the mortgage holder on the property versus the landlord on the property. Is that difficult to do? What do you have to do to set up all that paperwork and
Yeah,
everything?
that's a great strategy. It's called owner financing, or seller
Mhm,
financing. Very popular, um, especially among real estate investors that want to downsize their portfolio. It's a great way to do that.
mhm,
And so that's a niche area of note investing. How do you get that set up? You need to work with professionals. You want to have good attorneys. Real estate attorneys in general
mhm,
are very well versed at how to set up owner
yeah,
financing documentation, make sure that everything's
mhm.
done properly according to the compliance laws, and that your money is protected. And so
Yeah.
that's important. So don't go through that by don't go online and download a note, promissory note and mortgage document off the internet and just have the person sign it. That's a recipe for
Yeah.
disaster. You need to have an attorney that's in your state that knows the local laws, that can set up all your documents
Yeah.
for you. They will record the security instrument at the courthouse so that the lien is
Mhm.
properly on title and handle all of that and keep you out of trouble. Because there's definitely compliance,
Mhm.
a lot of compliance that comes into play with loans and financing, and so you wanna make sure you're doing
Mhm.
things properly. It's very important. So
Yeah.
get professional
That
help.
makes sense.
That's the bottom line with how to do that.
Yeah, and for all of it, really, professional help really for the whole, investing in real estate and buying the notes. I think you need someone like you to guide you through the way and get your book for sure. The little green book of note investing. So, Fred, tell us where people can reach out to you and find
Yeah,
you.
thank you, I appreciate that. So the best way to connect with me, to reach out, you can visit my website, which is fredmoskowitz.com. And you can connect
Mhm.
with me there. You can request a copy of my special report on note investing. Happy to send that to anyone that requests it. However, if you prefer a little bit of an easier spelling, you can visit giftfromfred.com and it'll take you right to my
There you
website.
go.
So you don't have to worry about how to spell my name. It made it easy, real easy for you. I always encourage people interested in investing, get in touch, reach out, share with me what you're doing, what your goals are. I always love communicating and connecting with investors and building relationships. It's a big part of what we do.
I love that. Giftfromfred.com. Go there and connect with Fred. Perfect. Well, thanks for coming today. I learned a few things. I hope everybody took some notes and start thinking about investing and having that passive income coming in. It's always comforting to know that you've got that and an asset that's appreciating. We'll see you next time right here. And just remember, if you're thinking about writing a book, reach out to us at eliteonlinepublishing.com. We make all of our authors bestsellers. See you next time.
Hey, are you looking to increase your revenue, build credibility, and elevate your brand? This podcast is brought to you by Elite Online Publishing, an innovative publishing and full spectrum marketing company. They will publish and market your book to make it a #1 bestseller. Becoming an author is the best way to market your business. So contact them at eliteonlinepublishing.com today. All of their authors become #1 bestsellers.